Hi, uh, welcome to another daily recap. So today it will be day 152 and it's December 5, 2024, Thursday. So today we are having one high impact news during our timing trading window. It's at 1:30. So it would be at New York session. So we must keep that in mind while trading and avoid unnecessary trades during that news window so that we don't get banned out of prop firms. So starting with the euro dollar with the swing structure, the swing structure is bearish, the internal is bearish. So zooming in, we can see that the price is slightly consolidating from the daily perspective, though the price is still in the daily supply. You can see there is multiple mitigations into the daily supply with strong buy side liquidity rejections. So what I can expect is price recently took this buy side liquidity. So what I can expect, price can push down, take out the sell side liquidity. So why this buy side liquidity means price had swept this buy side liquidity, push down to take out the sell side liquidity. So since this sell side liquidity is taken, price again pushed up to take out this buy side liquidity. So what we can expect now, price can push further down to take out this sell side liquidity as well as this sell side liquidity. So that's what we can expect from basically anyone can expect if they are seeing liquidity pools. Right. So that's what I also expected. So bearish, why? Buy side liquidity sweep and chalk bearish. And yeah, it's also a chalk bearish. So price took the buy side liquidity, it's a strong supply. So supply holding and the price also swept the previous day's high. So all these in confluence supports me to take shots. From the 4-hour perspective, the swing structure is bearish, the internal is bearish, and price has mitigated into the 4-hour demand zone. So here you can see price mitigated the demand zone and it also mitigated the supply and it took out these equal highs and even this liquidity pool has been taken out, which means these were the early sellers and these early sellers were taken out here. So lot of buy side liquidity has been taken, so price can push down to take out a ton of low resistance liquidity resting below. So that's why shorts were high probability today. This is the H1, and before we proceed to H1, just look at the 4-hour bias, supply chain mitigation, fake break liquidation. So what's a fake break liquidation? This is the one. So price pushed down, trapping the early sellers, and then pushed up again to take out those buy side liquidity. So swing structure is bearish in H1 and the internal structure is bearish in H1. So zooming in to the current internal structure for deeper analysis, here you can see price swept the buy side liquidity, which we already saw from the 4-hour chart. Now what we can expect? So this is the fractal low which I'm expecting the price to take out, and this is the demand, the last unmitigated demand which the price, if the price flips it, then I would be so much confident in taking shots from this flip zone. So this is what I expected actually from the price. And one more thing is that price swept the previous high with strong buy side liquidation and mitigated into the daily /H4 supply. So there is a lot of confluence for me to take shots. But unfortunately, and one more thing is that I started my trading session on this day from the New York session. So London, I was late to the screen, so I did not trade London. I started my trading session from the New York session. So at 13:13, what I could see is price did not push down, flip this demand, rather it just rallied up and took out all the buy side liquidity. So what I expected was, before the news, if the price goes up, probably it could trap those early buyers and then it can push down in the real direction, in the real higher time frame direction, and take out all the sell side liquidity and that trapped early buyers. So I was expecting that and I was waiting for this to be visible during the news. So before that, if I get any chance, then I would be happy to take shots. But a complete opposite happened. Price just moved further up into the daily supply, took out the buy sell liquidity right here with a strong rejection. So what I can expect is, price can push further up to take out the buy sell liquidity, take out the New York high, and if possible a chalk bearish. If the price chalks bearish, then I would be very much happy to take the phase B shots from here, and that would be high probability for me because price is still in the higher time frame supply, and also there is a lot of low resistance liquidity which I can target tomorrow. And also, since this is a news candle and there would be no orders left, so price can slide through this one and take out the um, sell liquidity below here. So a lot of confluences for me to take shots if I get sufficient displacement. That's my confirmation. So moving on into GU, from the daily perspective, the swing structure is bullish, internal is bearish. So zooming in, and one more thing to note is that price had mitigated into this daily demand zone. So this is a low probability demand, why it is already being mitigated and it does not have any um, imbalances created or display a strong displacement. So this is a bit low probability demand, but still it is present in the discount prices and price can still react out of these demands also. So price mitigated the demand, a strong push up, sell liquidity sweep here, this demand held, and price tried to mitigate this demand but failed, and anyway this demand got held and price is now pushing up, trying to take out the weak internal high. Unlike euro dollar, in GU it is very clear for me to take longs. And one more thing, but it is neutral because some things that is holding me from taking longs is that price is still in the daily supply. So anytime this daily supply can hold and push the price down. And one more thing is that price took the the previous day high with a rejection. Price did not close above. So price can use this buy sell liquidity and take out this strong pool of sell liquidity right here. I know this is a strong low because institutions were involved here by taking the previous day lows and with a strong push high. The same pattern can appear here also. Price can take the buy sell liquidity and make a strong push down. So we can't say that this is an institutional low and price can't go below this one. And one more thing I'm expecting the price to go below is because of this high probability demand which is unmitigated. So this is 4-hour chart, and you can see the swing structure is bearish and internal is also bearish. So this is a strong internal high, so I'm expecting the price to be bearish today. So price swept the buy sell liquidity. If the price took this low, which is the fractal low, then shorts would be high probability today. Why? Because the internal structure is bearish. So if the price makes a chalk bearish, then I can probably get a lot of bearish bearish sells, which eventually till the price takes out this weak internal low. But remember, this is a strong low because it has swept the sell liquidity. So coming to H1, the swing structure is bullish, internal is bullish, which means this is the weak swing high and I can expect the price to go up and take out the weak swing high. So this is in contradiction with the H4, where in H4 we saw that the internal structure is bearish and we are expecting the price to come down, and this high is a strong high, whereas in H1 this high is a weak swing high. So when there is contradiction like this, all you can do is just follow the session direction, because both longs as well as shorts would give you profits. So at the end of the London session, I started to trade the New York session, but there was no purpose in that one. This was my initial POI, which did not get mitigated, and this was my second POI, and which was not mitigated at all during the New York session. So there was unmitigated demands below, and price just rallied up without mitigating any of the demands. So yeah, longs were part of my game plan, but it did not happen. So what I can do is just let it go, and probably I can look for longs some other day. So now phase A2 longs or high probability because there is an unmitigated supply above, high time frame supply above. So I can look for the price to mitigate this demand and then keep pushing up till the price takes out this demand, this supply. So if the price mitigates this supply, then phase D shorts would be high probability if the price chalks bearish. So until then I can play phase A2. If the price mitigates the 4-hour supply, then I'll be playing phase A2 shorts. So that's the plan for tomorrow, but today there is no trades. So that's it from my guys on December 150, day 152, December 5, 2024. See you tomorrow on the next day. Until then, cheers guys. Bye.